the president could tell the Treasury Secretary to revalue gold right now, no congressional approval. Treasury Secretary would tell the head of the Fed, revalue it right now. And every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. Here's how it would work.
QT is officially over and Thanksgiving leftovers are in the fridge. Gold and silver have been on historic runs all this year, but how high will they go? Hello and welcome to Milk Road Macro, the podcast that's good as gold. I'm your host, John Gillen. Today is Monday, December 1st, and we are joined today by Andy Schectman. Andy is the president and founder of Miles Franklin Precious Metals, a leading investment firm specializing in gold and precious metals with over 3 decades of experience and billions in sales. Andy is recognized as an expert in wealth preservation and macroeconomics. Andy is going to share a ton of great alpha, macro wisdom, insight with us today on precious metals and a lot of other things. So if that sounds good to you, make sure you like and subscribe. Share this episode with someone who's going to enjoy it. And as a reminder, we still have our Black Friday sale going. It was supposed to end on Black Friday, but we decided to keep it open a little bit longer. You have until midnight tonight to upgrade to Milk Road Pro All Access at a 40% discount. That includes Crypto Pro, Macro Pro, and soon AI Pro, as well as our All Access portfolio, direct contact with our analysts in Discord, and a ton of other opportunities in Alpha there, all included in Pro All Access. So make sure you click the link in the show notes. Get in on that today. Today's episode is brought to you by Reserve DTFs. Get exposure to the entire crypto market in a single token.
John, it's good to be here, man. Thanks for having me. I'm well. Hope you are too. Happy Thanksgiving. Hope it was a good one for you and your family.
It was awesome. Thanks. Happy Thanksgiving to you and happy Thanksgiving to our audience. Andy, I thought a great place to just start this conversation would be with gold. Obviously, it's been on a huge run this year. A lot of people thought the rally was over when it dropped back below 4,000 an ounce, and it has now rallied up to new highs, or it's rallied over that again. Looks like it might be going for new highs. What are your thoughts on gold right now?
I think it's being reintegrated, John, into the global financial system. To me, the system which is built upon trust, I think, is breaking. And the world doesn't trust anyone anymore. It's not just the United States. I mean, you could argue that trust is something that has been broken repetitively. And the way that this is being addressed by the BRICS nations, and I would argue by the people who are behind the architecture of a new system, is bringing in blockchain technology and marrying it to things like gold, the immutability of gold. And you're beginning to see that really, really come into focus in the Southern Hemisphere, where gold is becoming a de facto settlement tool, taking the place of U.S. treasuries, which, going back to trust, have been sanctioned, have been weaponized, and the fiscal irresponsibility standing behind the Treasury, the United States, and our spending addiction is such that, you know, we've lost trust not only in the fact that we can sanction if we feel you're not aligned with us for any reason whatsoever. You know, forget about the fact that we invaded Iraq 22 years ago and we're still there, never found the weapons we were looking for, destroyed their country, destroyed their regime. The world looks at us as being hypocritical. And if you're not on the side of the West, well, you too will be sanctioned. So that's bad enough. Add into it the fiscal irresponsibility. We're just in the 6+ weeks that the government was shut down, we added over $600 billion to the debt. In that small period of time, we're adding $1 trillion roughly every 100 days. And 1 trillion seconds ago was 31,688 years ago. The numbers are becoming too big. The irresponsibility is becoming too gross. And the reality that the weaponization of the treasury market is something that really, can fall upon countries that are right on the edge. Like maybe that's what Saudi Arabia thinks, or maybe that's what the United Arab Emirates thinks, or maybe that's what a lot of these countries think. And that's the reason why I think gold is moving back into the monetary fabric of the world. And you can see it if you look closely enough. Not if you're watching mainstream, but if you're watching and reading the stuff that I do every day, 7 days a week, it's becoming overly obvious to me.
There's a lot in there to unpack, and I'm glad we have time for a longer conversation to go over these things. But I want to stick with gold, the asset, for just the beginning here. Why is there such a rush to own physical gold as opposed to other ways to get exposure? Because I feel like that's been a big focus for a lot of investors, is to physically get possession of gold. And who is this demand primarily coming from? Is it domestic? Is it foreign? Institutions, nations, central banks? Where are you seeing the biggest demand for gold coming from right now?
It's coming from central banks more than anything, sovereign wealth funds and central banks. And, it's interesting too, because first of all, the reason they want physical possession, again, goes back to trust. And you're beginning to see that on the COMEX market and on the LBMA, the two epicenters for delivery across the globe, because again, what gold and silver represent are assets that are simultaneously not someone else's liability. And, it's one of these deals where, again, you look at the sanctioning, you look at the mismanagement of the reserve currency. Let's look at it this way. If you were a country like Saudi Arabia, why the hell would you want to sell your oil that you have to work to pull out of the ground for dollars that can be printed just like that, bang, and here they are? Or worse yet, treasuries, which not only can be purchased with the money that the Federal Reserve just touches a button and purchases. It's immoral, right? But aside from that, you hold those treasuries, we will take them from you if we desire. But then you go even a step further and look at the levels of inflation that come out of the CPI, the CPI issued by the the Bureau of Labor Statistics, which says, inflation's only 3%, but it excludes food, energy, and housing. You interview John Williams of Shadow Stats. That's a great interview. He'll tell you that inflation's 11 or 12%, and he just uses the same metrics that used to be used before they changed them. And those metrics would say, no, we're way higher than that. So in essence, you're Saudi Arabia. You're taking dollars that have been massively and irresponsibly created, that are losing value every day. Every new dollar that is printed, it takes away purchasing power from those that are already in existence. It's like counterfeiting. And then at the same time, Saudi Arabia, who's got one leg in BRICS and one leg out, not only were they one of the have been admitted to BRICS, and they haven't fully accepted it, but they're one of the 5 countries that stand behind mBridge, which is the cross-border payment system. They are one of the 5 primary countries that represent mBridge, which just had its first trade the other day between United Arab Emirates and China, 2 of the primary developers in it. And so the bottom line is that the world has lost trust. The world has lost trust in the United States. The world has lost trust in the dollar, or is beginning to lose trust, and certainly in the treasury market. So it's an asset that you can hold that can't be sanctioned, can't be manipulated away from you. And I think that's taking on a much, much more profound effect, in the respect that, people assume that what has worked before will always work, and they rarely question these assumptions. And that's why you don't hear any of this from the mainstream. But to me, a different perspective matters now more than ever. And I think just look at it this year alone, right? Gold's up almost 70%. Silver's up basically 100%. And the S&P 500, in the midst of the greatest tech rally since the internet, is only up 16%. So it's up almost, 6-fold? And these so-called experts who have dismissed gold for years, they have to admit that they were just simply wrong. Gold has, and silver have, if you look going back to 2000, gold has averaged 9.9% per year compounding, whereas the S&P 500, had you been one of the 0.5% that actually reinvested all their dividends, 9.6. It's beaten the S&P for 25 years cumulatively. It's doubled the performance of the 10-year Treasury, and it's now up 5 times it this year. But nary a word as to why you should hold it. And, I think that when you talk about the system and the trust breakdown, again, I can't underscore enough that in a world that has left a benchmark like the gold standard, markets run on trust. And there is a belief that when you are promised, like COMEX, the ability to deliver something that is built up over decades, and you buy a contract, You take delivery, you assume the metal's still there. And that's why COMEX has always set the global price. But trust is very much like a bridge, and it handles a lot of weight until it doesn't. And so I think that that's kind of where we're at right now. And I think the world is just basically saying that, there's too much counterparty default risk. And not only that, price discovery is something that has been controlled by the West through massive rehypothecation. That means selling the same coffee cup full of coffee to 1,000 people who never take it to drink it. They just own it. But, I want it. Thank you. No, I want it. No, I want it. No, I want it. That's a problem. And when that begins to happen, like we saw, I would argue maybe something like that happened right before Thanksgiving, where evidently a cooling failure in a warehouse full of servers that only affected the metals transactions, nothing else. All the other COMEX computers were not too hot. Maybe that's why we saw that. Or maybe in London, where it's a T+1 exchange, where T is trade day plus 1. The second day, that's settlement. The third day, the bar should be moving your way. The London Bullion Metals Exchange, 140-year-old exchange, oldest in the world. I want my metal. They say, nah, it's T plus 8 weeks because there's a shortage of manpower and trucks in London. Sounds right, right? So the point of it is trust is fraying in the Western system. And I believe that the countries around the world who were never sophisticated or coordinated or motivated, or basically they were third world for most of the last 100 years, they aren't anymore. And they are coordinated, motivated, sophisticated, wealthy. They know exactly what we're doing with the prices of the world's commodities, and therefore they are standing for delivery. That is the Achilles heel. They never did. Now people say, well, why wouldn't they just buy it all up? Because you cut off your nose to spite your face. If you buy it all up, the whole thing busts apart. Boom, it's over. But slowly, little by little, keep draining. It's like death by a million paper cuts. But that little by little is starting to move a little faster right now. And I think that, you look at countries like Shanghai, the Shanghai Metals Exchange, or even in Hong Kong, they'd love to take over the gold price discovery from New York. And I think once that shift happens, it won't reverse, but it starts with physical possession. No more paper promises. I'm going to stand for delivery. Thank you very much. And that is what is beginning to rattle the markets. Not enough metal. In a system where no one stands for delivery, you can play the game all you want. But the minute you get sovereign nations that have pocketbooks every bit as large as the JP Morgans and Goldman Sachses of the world, different game altogether. It's an existential threat when you have to deliver, because that's any market that doesn't deliver no longer will be the world market. It's over, game over. And so the fact that no one ever did stand for delivery, but now they are massively standing for delivery, yeah, it's changing right now, right out in front of us.
Really appreciate the insights on that. There's a lot of analysis in there. I want to ask your thoughts on something that's been getting a lot of attention and prominence recently, which is this intersection. You mentioned mBridge, you mentioned blockchain, this intersection of the gold markets with the blockchain ecosystems and so forth. There's been a lot of tokenized gold products. JP Morgan announced they're bringing one out. Tether's had one for a long time. Tether incidentally announced that they have been buying tons of gold as well. They now have 116 metric tons of physical gold, which makes them the largest holder outside of central banks and governments. How do tokenized gold products fit into this? Where do they factor into this this mad global dash to acquire gold?
Yeah, I've been approached by a few very large companies that want to integrate it into the system and have asked for my input and maybe even my participation. It's happening. As much as I prefer gold in an analog world, the digital world is coming. And in running a business, if you don't roll with the changes, you get rolled by them. And so I understand it is something that is happening, and will bring into it. To me, the big issue of what it would bring in would be collateralization of your gold. You can use it as collateral if it's on a blockchain like that, versus having it in your safe in your home or wherever it is. It becomes a problem. It's also becoming more mainstream, so that the lending institutions, the banks and whatnot, I mean, you're talking fintech that would be aside from that, but even the mainstream banks, I think, will acquiesce, and it will be used as collateral. For me, what matters, and I've told anyone who's asked me who's developing these, is that what matters is who's holding it, in what form, and Is it deliverable? And if so, how? These things are very important, right? You need to be able to, even if you never do, it's kind of like the Comex, right? No one ever stood for delivery. And if you couldn't get delivery, then what is it? It's bullshit. However, sure, you can stand for delivery. Here you go. So in what form? Who's auditing it? Where's it being stored? How can I take delivery? In what form? Those are the things that matter. But what it would really do is also democratize gold and silver ownership globally, in the respect that, with gold at 42, almost 42.50 today, it's getting expensive. Well, if you can buy $5 worth or $1 worth, the way you can, like Bitcoin, where you can buy tiny little bit, it opens up the ability for everyone to own some form of hard assets. For those that own larger amounts, it gives them the ability to collateralize it, and I think it has significant potential and a significant future as far as I'm concerned. So resist as we may, it's here, it's real, it's coming, and the entity that is able to do those things first, make it deliverable, show who's holding it, who's auditing it, in what form, and then the ability to easily stand for delivery in a form that offers utility, it's the real deal.
ETFs provide investors with a structured, disciplined, and diversified approach to crypto, which is cool, but the world is moving on-chain. We need a crypto-native equivalent. That's exactly what Reserve's decentralized token folios, DTFs, bring to the table. Reserve DTFs are rule-based baskets of crypto assets packaged into a single token, like CoinMarket's CMC20, crypto's version of the S&P 500. Go to milkroad.com/reserve to find out what's on offer.
Right. So what I'm hearing you saying is that this tokenization of gold is going to expand and democratize access to gold as an investment product, but then also increase what you're able to do with gold if you're holding it, using it as collateral and so forth. So interesting to see that. I think that there's going to be some continued interest around that. I want to drill down a little bit more on what your view is around these BRICS nations and how they're using gold or maybe a gold-backed trade settlement system as a challenge to dollar hegemony. The United States has been clear about trying to use stablecoins to expand dollar hegemony and kind of keep its status globally. Is there really a threat to the dollar? Is this overblown? How do you see that playing out, or people missing something about what's really going on here? What are your thoughts on this situation?
I think that's a great question, and I hope you're prepared for a little bit of a lengthy answer, but I will tell you that Tether is involved in it on the other side. We'll start with the BRICS nations. They have been the largest accumulators of it for years. They've been largely the ones that have been standing for delivery. They are the ones that produce the most, consume the most, and they nary report what they own or what they're buying. In fact, there was an article that came out that China owns as much as 10 times what they report. That at best 1 in 3 transactions is reported to the IMF. They're supposed to report it if the PBOC is taking possession of gold at 999 pure, right? Well, if the People's Liberation Army buys it, well, they don't have to do it. Or China, as I've been reporting for a while after talking to my friends in the mining industry, has been flying all around Latin America, in particular Peru and Mexico, and buying largely silver, but also gold in doré and concentrate form. Doré is a crudely refined bar that the miners make. They refine it crudely and then send it for full processing and refining somewhere else. They're saying, no, I'll tell you what, we'll buy the doré bars from you. We'll pay double what the West will, and we'll take your concentrate, which is a sludge byproduct. Think of it like a goo, a byproduct of what they're doing. And there's a lesser amount of ore in there, but they take that too. They pay double what the West will. They ship it back to China and they refine it themselves. That's not reported. The IMF busted them last year for not reporting stuff that the customs numbers coming out of London and Switzerland reported, oh, sorry, we made a mistake. But they're the largest producers in the world, China is. But you look at Russia, you look at India, you look at Saudi Arabia, they're all massively accumulating gold and silver. So to me, and again, this goes back to the lack of trust. They used to hold treasuries. You look at the petrodollar deal, right? The petrodollar deal said, we'll protect Saudi Arabia. They'll take dollars globally for oil only. And they'll take the excess reserves and recycle them into treasuries, which kept interest rates low, kept asset prices high, made the goods cheap at Walmart, etc. Not anymore. So now, after seeing what they could easily do to Iran, what they can easily do to Russia, the mismanagement of the currency, all of the crap that we saw under the previous administration, the wokeness, the election integrity, questioning the two-tiered judicial system, cops getting beat up in broad daylight in Manhattan, meritocracy being usurped by lifestyle, all of this stuff that was just too stupid to be stupid. A lot of these countries just said, we're done. And so instead of using treasuries, they're using gold. In fact, they're selling treasuries. Gold, which has doubled the performance of the 10-year treasury, but cannot be sanctioned from you. And so how they're doing it. mBridge, as you mentioned, there are 4 countries that developed it along with the BIS Innovation Hub, the Bank of International Settlements. And it's China, Hong Kong, Thailand, and the UAE. And they were rolling. And then Saudi Arabia became the 5th member, although not the original developers. Then they were rolling it out a year and a half ago when the BIS at the 12th hour said, we can't be involved with any product that would allow any country to sidestep Western sanctions. In other words, they got their tit twisted. And at the 12th hour, they pull out in a very a very underhanded way. It's almost espionage, like James Bond, and they screwed them at the very. They said, we're pulling the plug on mBridge. So they change it to the bridge. And it is the mBridge technology, of which we just saw last week a trade between UAE and China using digital yuan for whatever it is that they're buying. But here's how it's going to work. The Shanghai Gold Exchange is in the process of what they call internationalizing the yuan. What they're doing is trying not to piss Trump off too much. And they are building a series of multi-jurisdictional vaults around ultimately the Belt Road Initiative, which is the largest infrastructure project in human history. Asia, Africa, South America, parts of Europe are being connected through rails and bridges and maritime channels and roads and whatnot. And they will use this technology, first of all, the mBridge, to trade with everyone across border using local currencies, just like Saudi Arabia and UAE did. And the vaults are being built in multi-jurisdictional territories in order to house gold, which will be the settlement standard. To give you an example, China can trade with Saudi Arabia. By the way, the first vault was just completed in Hong Kong. And why is that important? Because gold that comes out of China has to go through Hong Kong. So China can buy oil from Saudi and use the digital yuan, which is, by the way, the mBridge settles in 7 seconds, free from SWIFT interference. It's not compatible with SWIFT, at a 98% reduction in fees, just like that. And so China can buy oil from Saudi, use digital yuan, which builds their own ecosystem, their own monetary future. Instead of switching to the dollars first through intermediary banks and building ours, they'll build their own. Now, Saudi Arabia can say, I don't want that digital yuan. I'll buy gold immediately. And now China has made the yuan immediately convertible into gold without having to go back to dollars first. So it goes right into Hong Kong. Give me my gold, bang, out it comes. Guess where the next vault is being built right now? Saudi Arabia. And then they're going to build them all through the Belt Road. Gold will be the settlement status, the settlement standard. In other words, for currency and trade imbalances, they'll settle in gold, which is tier 1 as reclassified by the BIS. And you will see these countries who will find safety in numbers not only build their own monetary ecosystems, but be able to trade with each other, across the bridge network, and settle imbalances in gold. At the same time, you have what's called BRICS Pay, which is the B2B, the retail side of things. They are rolling that out right now. In fact, there was a meeting a month or so ago to start to roll this out through the Belt Road Initiative. It's 70% of human population that will have the ability, whether you live in a country in Africa and you can buy a product that is made in China and instantly buy it without having to go through all the shit you would normally have to go through. And that will be B2B. It's interesting too, just as a side note, I was listening to the guy who developed it, an interview he gave, and the interviewer said, but couldn't this, because you're running it out to 170 countries or whatever, not just the BRICS nations. This is where people mess up. And by the way, where people ignore how big the BRICS is, you had the Russian minister, Sergei Glaziev. It was either Glaziev or Lavrov. I think it was Lavrov. And he said, By the way, we're rolling out mBridge, and it will be open to non-BRICS members as well. So if you add into it the Belt Road, which is 50% of human or 75% of human population right now, you add into it the Shanghai Cooperation Organization, which is about 35% of human population, the Eurasian Economic Union, and the BRICS. They're all tied together incestuously. You're talking 90% of human population that will have access to a settlement system outside the SWIFT and outside the dollar. Anyways, going back to the BRICS Pay, which is the B2B side. So the bridge is for central banks, right? The other one would be like an app on your phone or a credit card. And the lady said to him, hey, couldn't that lend itself to terrorism? You're funding countries all around the world. How are you going to be able to protect it? He said, we're very, very aware of that. And so we have embedded into it. And think of the stable coins here in the United States. We have embedded into it KYC, AML, and KYT technology. Now, what makes Miles Franklin different, by the way, than other companies is that I live in Florida, where we've had a satellite office for 20 years. I moved here 5 years ago from Minnesota, where I left my corporate office. And Minnesota is the only state in America that regulates the industry. And that's why I left it there. We are held to a higher standard. We're licensed, we're bonded, we're background checked every year. Most companies won't do business in Minnesota as a result of that. But my point is, I take all these classes with, anti-money laundering classes and IRS classes, all that stuff we have to for licensing. And I had no idea what KYT is. And I take all these classes. I know what AML is, that's anti-money laundering. I know what KYC is, that's know your client. KYT, know your transaction. So these stable coins will know who you are, where the money came from, and what you're buying. So, just as an aside, when we talk about no CBDC, yeah, well, so what? This is a CBDC in a stablecoin outfit, at least here in the United States. But over there, anyway, they're all using this new system that will sidestep the dollar, period. And so they are using gold in place of the U.S. Treasury, not to replace the dollar, but to replace the Treasury, which stands behind it. And the fact that you'll have all of these countries that will have the ability to settle outside the dollar and then take reserves and put it into gold and have them in these vaults so that you can settle imbalances just like that. Not only is it multi-jurisdictional, where you look at a country like Venezuela, who asked the Bank of England for their gold back. Nope. But if it's in all of the vaults all over the place and you add into it the vault in Moscow and St. Petersburg and Singapore and all of these other vaults, the United Arab Emirates, and then add the BRICS vault, you're adding an ecosystem where trust will be validated through blockchain technology. Yeah, I see it all there. And the ability to stand for delivery in your own jurisdiction. It's happening in a very, very fast clip. And they're doing it because they have safety in numbers and they know the dollar is in decline. You look at what they're doing here, and it's a whole different story. And in my opinion, and how gold is playing into the system here, I believe it will be integrated into the bond market here. I believe the United States wants to relinquish the dollar reserve status. I think they realize they can't do it. Now, if we go back to the previous administration, there was a complete and utter fool, a knucklehead. If you ever watched Jared Bernstein try to explain how treasuries were made, he was the chief economic advisor to the U.S. government under the Biden administration. It was the most humiliating thing
of him. Yeah.
Dude, I mean, it was so embarrassing. Wasn't even funny. But he did write a report to his credit called Dethrone King Dollar, which was picked up in the New York Times, that advocates for losing the reserve status because of something called Triffin's Dilemma. Triffin's Dilemma says if you're the world reserve currency, you will always have a trade imbalance because we cannot provide enough dollars to the world simply through trade alone. So we export our dollars to the world, who has to sell their currency to buy ours, making ours higher and theirs lower. And over time, the constant doing of this hollows out your manufacturing base, because manufacturing goes to places like Vietnam and China that are so much cheaper that it just makes more economic sense, but it hollows out our manufacturing. And you look at the United States right now, 60% of the country has a literacy rate of the 6th grade or lower, right? So we're dumb, we're broke, we're insolvent, we don't make anything anymore, and AI will kneecap God knows how many jobs in the near future, even mostly the entry-level jobs. And so I think if there's any nobility in all of what Trump is trying to do, and I'll show you how I think he's going to do it, it will be to bring back manufacturing. Now, most people say, bullshit, you can never bring back manufacturing. Well, here's how they would do it. By the way, not only did Jared Bernstein do that, so did Vice President Vance, who 6 months ago or so wrote a report on White House letterhead and has spoken about it, that being the reserve currency is no longer a benefit to the country. It has made cheap prices for the goods we buy at Walmart. As I mentioned, it's kept interest rates low and asset prices high, but it's destroyed manufacturing. We don't make anything anymore. And you can't rely on your foes to give you everything from aspirin to airline parts. You can't. And so how do you bring it back? Well, number one, he says we can't be the reserve currency anymore because of Triffin's dilemma. Both of them said it, and they're right. So what do? Well, the first thing you would need to do would be to lie to everyone and say tariffs are going to be on gold. We got to get all the gold back. So the interplay between the LBMA and the COMEX, no one's thinking, oh, well, they're changing, they're reshoring it. We better not relinquish it. No, it's tariffs. We need it back to cover the contracts in case they're staying for deliveries. We'll send it back. Don't worry. All of that gold has come back to the United States month over month over month over month. What are you going to say?
Yeah, I was just going to say this is true. We have switched from being a net exporter to a net importer of gold, and a lot of people haven't noticed that change that's happened. So I think that's important to call out. Yeah, go ahead.
Every single month, it's non-stop. In fact, let me just see what's happened. Just in the first 2 days of the December contract, all the gold has come back. I mean, billions and billions and billions and billions of dollars worth every single month has come back. But don't worry, it's tariffs. But it's not tariffs. They're reshoring it, right? That's number one. You'd have to bring the gold back. The second thing you would need to do would be to debase the dollar, right? Because how do you sell your product to the world? Here it is right here. Day one, silver, 7,330 silver contracts. That's almost 37 million ounces of silver. About 2 billion worth, and in gold.
That the United States is home shoring a lot of gold and bringing it back into the country as opposed to what we had been doing, which was exporting it.
So there was 1.3 million ounces of gold came in November, which is whatever, but huge amounts every single month. Who's spending billions and billions and billions and billions of dollars? Who's doing it? No one is talking about who's doing it. So you bring back all the gold. Now, how do you devalue the dollar? That's a big one. That's a huge one. How do you do it? Well, you revalue gold. Now, here's the interesting part. Bring in the Genius Act. The Genius Act has passed, and that says that every dollar that moves needs to be backed by stablecoins, right? And Tether, USA Tether, will be the primary benefactor of this. Now, USA Tether, as you mentioned, Tether already has $13 billion worth of gold, and they were just at the Beaver Creek Mining Summit last month, one of the biggest in North America, talking directly to the miners. What's interesting is that the CEO of this new division, USA Tether, which is already Genius Act compliant, is a man named Bo Hines. And Bo Hines was Trump's crypto czar through August. He's benefiting from the rules he made. And if you think about it, what devalues the dollar? How do you do it? When Roosevelt confiscated gold in 1933 at $20 an ounce, he paid everyone $20.67. 67 cents in 1933 when a dozen eggs were a nickel. That's a lot of money. And then he immediately devalued the dollar by 40%, making it $35. When you hear guys like James Rickards saying that he thinks it will go to $24,000 and an ounce he uses the M2 money supply divided into the gold, or Mike Maloney saying $10,000 in most central bank balance sheets, gold is held in, by the way, in something called this gold revaluation account. That's the name of it on the balance sheet. So if they were to do that, not only if they revalue it massively, not only would it benefit every central bank on the planet, but what it would do would massively devalue the dollar. So when you talk about, I'm sorry, go ahead.
Just a point on that. The United States holds an enormous amount of gold on its balance sheet, currently valued at about, I believe, about $42 an ounce. And so if gold does get to 10,000 and they revalue it, explain to our audience how that would play out. I wanted to let people know that, because you're saying gold at 10,000, but it's on our balance sheet at $42.
Right. So, and the president could tell the Treasury Secretary to revalue gold right now, no congressional approval. Treasury Secretary would tell the head of the Fed, revalue it right now. And every $4,000 increase in the price of gold would give the Treasury general account 1 trillion free and clear. Here's how it would work. The Treasury would take gold certificates, issue them, and give it to the Fed. The Fed would print at $10,000. So that's they would print $1.5 trillion. It put it at 24,000, like what's his name? James Rickard says. It's already at 4,000. So another 20 would print 5 trillion free and clear. Boom, push a button. They hold the certificates as collateral. They do not own claim on the gold that belongs to the American people, just the fiat value. It's an accounting gimmick. The Treasury now gets that 5 trillion, which massively devalues the dollar, and they can start to pay down their debt or work things off that way. But here's the interesting part. I got to kind of lay it out in steps, and it would be very easy for them to do. Not only would it massively benefit every central bank in the world who's been accumulating it all, but it would allow us to pay down our debt and wickedly devalue the dollar, right? Vance said we can't be the reserve currency anymore, right? So Trump says, I'm bringing back manufacturing. It doesn't do you any good if you can't sell it to the world. So you wickedly devalue the dollar. In essence, soft defaulting on the reserve status. Now, here's where it gets interesting. Now you have a very devalued dollar where you could hypothetically sell your products to the world at a much less of a price, right? How do you bring back your manufacturing, however, and make the new facilities? How do you do that? Well, if Judy Shelton is right, and Judy's been on my show twice, Judy was Trump's nominee to run the Fed. She wrote a book called As Good as Gold. It's fantastic. She's maybe the smartest person I ever interviewed. And she said, Andy, when I was on the now she was not confirmed in 2016 due to partisan politics, but she said, Andy, when I was on the transition team with Trump, he told me on multiple occasions that July 4th, 2026 is a big day for him. It's the 250th anniversary of the country. He will peg gold to the back end of the Treasury market. Now, why would you do that? Because you would have zero upfront borrowing costs. She said, we'll start with the 50-year Treasury, and then it'll be 30, 20, 10, and maybe even a 5. The 50-year would have 1% interest or so. The rest of them, zero interest, no interest rate, no upfront borrowing costs, redeemable in gold. And she said, and they'll make stable coins off of those too, which will further devalue the dollar. But here's where it gets interesting. I haven't finished the Genius Act yet. So anyways, the back end of the bond market will have zero upfront borrowing costs, redeemable in gold. And you just let gold go higher, 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 higher. The dollar goes lower, 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 lower in relation to gold. And by the way, the dollar is supposedly down 10% this year or thereabouts, 8 against the basket of horseshit currencies, the Dixie. It's down 100% against silver and 70% against gold, the real barometer. So you let gold go higher and higher and higher and higher. It makes it easier to pay off your bonds. You can bring back manufacturing at zero upfront borrowing costs. But let's go back to the Genius Act for a minute. Genius Act says every dollar that moves, once it's fully implemented, whether you're buying a pack of chewing gum or a new car or a house, doesn't matter, it will move on blockchain networks similar to mBridge by stablecoins. But the legislation says those stablecoins need to be backed largely by U.S. treasuries. Think Bo Hines for a minute, right? Trump's buddy, wink, wink, nod, nod. Here's where it gets interesting. So those stablecoins, which are backed by U.S. treasuries, have interest attached to it. The treasuries do, right? But it's not transferable to the holder of the stablecoin, right? And if I buy something, that stablecoin is burned. It's gone. It's created, backed by treasuries, spent, burned. But the interest on those treasuries, which is not transferable, stays with Tether, right? And what have they been buying with that interest? Gold and Bitcoin. Now, I would argue that the Bitcoin is going to be used to pay down the debt. I think that's what another Russian foreign minister said. That's what they're going to do. They're going to put all the debt in the cloud. The U.S. is going to screw everyone. I agree. They're going to let Bitcoin go higher. They'll do periodic rug pulls, and they'll use it to pay down the debt. But by buying gold, they already have 12 or 13 billion who said they're the largest non-central bank holders of it. They will continue to buy gold. What does that do? Oh, well, that devalues the dollar more and more and more and more. And if I had to think the line of conspiracy and reality, the wink, wink, nod, nod, where Trump's buddy, the crypto czar, is now running USA Tether, you're going to sell that gold to me, Bo. You're going to sell it to the Treasury. It's going to be a deal. We're going to work it out. You're going to sell it to the Treasury. You're going to make unlimited money. You will be rich forever. But that gold is going to belong to the U.S. Treasury, and we're going to use it to back the bond market and to have tons and tons of gold and weaken the value of the dollar. Why? So we can sell our products to the rest of the world. Case in point, give up on the reserve status to support backing the bond market, to be able to reshore manufacturing at zero upfront borrowing costs, to have any chance whatsoever of your children and mine and our grandchildren having a future in a world where we don't make anything anymore and we're broke and we're in big trouble. I mean, again, we talk about a $38 trillion debt. That doesn't take into account Medicare, Medicaid, Social Security, and government military pensions, which is $175 trillion. We're $200 trillion plus in debt. We're dead. And if we don't bring back manufacturing, it's game over. The only way to do it is to default on the reserve status while maintaining integrity in the bond market, where you don't have to trust us anymore. It's gold backed and deliverable. And you can see it right here on a blockchain system. That's where we're going, I believe. In essence, the U.S. will back the bond market. The global South will use it as a de facto settlement system, replacing the Treasury. In both instances, it's all about trust or lack thereof, or realization that the system is changing. So gold won't be used as money the way it was prior to 33, but its role as money is now being reintegrated into the Western system and the global South. I believe that in my soul. I believe that everything I'm seeing tells me that's what's happening, or something along those lines.
Andy, I really appreciate you coming on the show to lay all of this out for our audience. I think what I would like the audience to take away from this is that there's a lot more at play here than meets the eye, and this is a great time to lean in, to pay attention, and to see what's really going on behind the scenes and what's driving a lot of these major rallies in precious metals. Andy, we're coming up on time here. There's a lot of questions I'm not going to get to, but I wanted to kind of let you keep going and share out that whole framework for how gold fits into the macro picture here. I have to ask you one quick question about silver, though, before I let you go, because there's a lot happening in silver that is also going under the radar. The United States recently added silver to its list of critical minerals. There's a lot of pressure, or I guess demand from a lot of different players here. Industry players need it for industrial activity because of the properties that silver has. Investment firms are interested in it. Nation states have started a race to control it as well. The global commodities market. So I guess if I have a question around this, just give our audience a little bit of your view on silver and why there's this sudden rush and war to control the silver commodities market right now.
I think there's a realization that silver is critical and strategic, not industrial. And, so far already this year, over almost 13,000 tons have stood for delivery. That exceeds the combined output of Mexico, China, and Peru, and maybe even Chile. Those are the four largest producers in the world. And the point of it is that silver is depleting in nature. And it's depleting on the exchanges. It used to, for 5,000 years, it came out of the ground and was priced globally at around 16 to 1, 16 ounces of silver for every 1 ounce of gold. You listen to Keith Neumeyer, the CEO of First Majestic, he'll tell you it's coming out of the ground now. It's 7 to 1. It's depleting. It's found in nature in a form called epithermal, like your skin is epidermis, right near the top. This is our now 5th or 6th year in a row of a structural deficit, way over 1 billion ounces of silver, lack of silver versus demand in the last 5 or 6 years. And there's the realization that it's needed in everything from military to anything that conducts electricity, batteries, and that kind of stuff, to anything digital. A digital world, a military world needs silver, period. Solar panels, all of it. And it's disappearing, it's depleting. And it's been massively suppressed to the point where there's about 1,000 commodities traded on COMEX. It is the largest it's had for over a decade, the largest concentrated short position of any commodity ever traded in the history of the COMEX by a handful of Western banks. Now, my belief, it has a lot to do with the military-industrial complex and their need for silver and high-tech weaponry. That's why they've suppressed it, because they didn't want the world to understand its true value. But again, going back to these countries that are sophisticated and motivated, well, India has imported over 800 million ounces in the last 5 or 6 years. Saudi Arabia just bought several $100 million worth. Russia is adding it to their strategic stockpile, for the first country to do so. China, as I mentioned, flying all over. They're the second largest producer in the world, and they're flying to South America to buy concentrate in doré and pay twice what the West will to send it back to to refine it, it speaks volumes of what it really is worth. And all year long, the LBMA has been on the edge of it breaking. Like I said, they've all year long, they've been, instead of a T+1 settlement. Imagine you own a big jewelry company. You buy contracts in London to take possession to fabricate your jewelry. And they say, John, we're really sorry, brother. It's going to be 8 weeks before you get your silver, but it's a T+1. I'm supposed to have it in 3 days. Yeah, but we don't have enough trucks in England or manpower. The system is breaking. A system that was built upon the West's ability to rule the world with big checkbooks and military is now being exposed by the little itty bitty silver market, which you can stand for delivery. And silver is far more integral into the system, from military to anything digital and electric. Any way anything moves needs silver. Anything. And it's being realized. And so not only has the United States made it a critical mineral, the European Union did it in 2023. China just did it, and Canada has been trying to do it. I don't know if they did it, but there was a whole big consortium of miners and banks that were petitioning Ottawa to make it a critical mineral as well. There is a race to get it, and I think there is not an asset on the planet that has its potential, because it has been suppressed for so long, and massively suppressed through naked short contracts, where the banks could just overwhelm by selling short, selling. Even if they didn't have the metal, they just had unlimited money, and they drive the price down and people would just bail. Well, now these countries, these sovereign nations are like, okay, good, we'll buy more. And that's the problem. So I think it is the trade of a generation. As God is my witness, I mean that. I don't tell people to buy metal to get rich or to become wealthy. It is wealth. And that has outlived 2 world wars and German hyperinflation and the Great Depression, and it's coming full circle right now. And I think the biggest money in the world understands that it's far more important and worth far more than the dollars used to purchase it. And I think this is a trend that will continue. Today alone, silver is up $2.25, up about 4% to almost $59 an ounce. It's up 100% this year, pretty damn close to it. Where's all the fanfare by the mainstream? They're all infatuated with NVIDIA and the growth of the S&P, which is up 16% this year and has basically about 7 times less appreciation than silver this year, and yet no one talks about it. And that's by design too. So yeah, I don't think we've seen anything yet, to be honest with you. I truly do not. And I'll leave you with this. For about 100 years, man's price ratio, because gold's role as money and silver and industrial has been about average about 42 to 1. 42 ounces of silver for 1 ounce of gold, independent of the fact that it had a 16 to 1 geological footprint across the globe. Now, because so much has been exploited, that number is 7 to 1. But if we take 42.50 and divide by 42, which is the average price of the last 100 years, well, you get $101 an ounce. That, if tomorrow morning silver hit 101, not only would that be cheap compared to its current geological footprint, that would be the average price between silver and gold for the last 100 plus years. So take 42.50 and divide it by 7, you get $607 an ounce. Now, as crazy as that sounds, that's just the geologic ratio right now. That is the ratio between gold and silver in Mother Nature. And I would simply say to you that there are very few things that you can buy that are just barely above its 1980 peak of $50 an ounce. In fact, it got up to 54 for a brief second. But here we are now in uncharted territory, and the race for physical delivery speaks volumes about what silver is really worth. So yeah, I think silver is an opportunity that you see once in a generation, and I mean that sincerely. So guess we'll see what happens.
I guess we will. Andy, precious metals have been a market for thousands of years, but they've only recently gotten a ton of attention from a lot of investors. And you have been at the forefront of doing great analysis and sharing insight with people about this market and drawing from your huge wealth of expertise. So thanks so much for being on Milk Road Macro. I really appreciate you coming on, sharing this with our audience. Where can we send people to find more of you and your work online?
So online, it would be Miles Franklin Media. We have Michelle McCory working with us now, and a lot of new things that I wish I could talk to you about, but I can't yet, that are coming. If people are interested in pricing, don't go to our website and look at price. Send us an email at info@milesfranklin.com. Request our price list. We update it twice a week. And if you find prices that are better, let us know. Typically, we're able to match or beat them, but we do that for a myriad of reasons. Info@milesfranklin.com. Request the price list or any questions you've heard here you want further clarity on, let us know. We will reply to you. If you want to be contacted, put your phone number down. There is no obligation one way or the other. And I'd love to come back on anytime to pick up. I know you said you have questions left. Usually is my problem. I can just keep going too long most of the time. So I'm happy to jump on with you again and pick up where we left off, or as often as you'd like. I think there's a lot of interesting things heading our way, and be happy to share it with you, at least from my perspective.
Absolutely. Well, we'll see what happens in 2026, and we'll check in with you, I'm sure, again in the future. But thanks for being here, Andy. This was really fun. Thanks so much.
Yeah, man. Stay well. Thank you.
Thank you. And thank you all for joining us. I hope you all learned something today. I know I did. So until next time, stay safe, stay educated, stay bullish, and we will see you all on the next episode of Milk Road Macro. Thanks for being here, everyone. Bye. Want insights on what's really moving markets and how we're trading each event? Subscribe to our channel, then join the Milk Road Macro and Macro Pro newsletters. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.